Hi all, happy morning. Hope your preparations are going well since the exam dates are coming very close. And one of the good subjects to score in with is taxation. So we are seeing super 30 questions in this video. So this is in continuation to the amendments video. The amendments video has already been uploaded in the channel. You can just check that. After the amendments video, the next thing we are going to focus now is we are going to take a few important questions from each of the chapters and solve those questions in this video. Okay, so basically this video might be in 3 to 4 parts. So in the first part, we are expecting to solve somewhere around 8 questions. And in the second part, we'll complete the income tax portion. And the third part is going to deal with GST. So this is the plan. So this PDF, if you want, you can just text the number which is given here. You will get the PDF of this PDF. Okay. So now let us delve directly into the questions. So the first question which we are going to solve today is in relation to the chapter residential status. Let me share my other screen. Yeah. So the first chapter which we are going to solve today in question number 1 is in relation to residential status. Generally, in residential status chapter, there are two types of questions. The first one will be in relation to whether resident or non-resident. This will be the first type. So you have to find the residential status. Next one will next type of question is scope of total income question. Scope of total income. So here you need to find what is the taxable income of the specified person. Okay. So these are the two types of questions. So we'll be handling one type of question in each. Okay. So the first question which we are going to deal today is in relation to scope of total income. The first question which we are going to deal today is in relation to scope of total income. Let me share my screen itself. The first question is in relation to scope of total income. Sathan, a Sri Lankan national, discloses the following particulars of his income during the previous year 24-25. So the assessment year is 25-26. Question number 1. Assessment year is 25 to 26. So what is the what do you have to do on this question is we have to determine the income liable to be taxed in the previous in India for the previous year 24-25 in the following cases. If he is a resident and ordinary resident, if he is an ordinary resident, and second he is a resident but not ordinary resident. So as you all know, totally there are 3 types of residents. 3 types. Resident and ordinary resident, resident but not ordinary resident, but not ordinary resident. Next is non-resident. Okay. So in case of Indian income which is earned in India, Indian income, it is taxable for resident and ordinary resident. It is taxable for resident but not ordinary resident. It is also taxable for non-resident. Next is global income outside India. It is taxable for resident and ordinary resident. It is not taxable for resident but not ordinary resident. It is also not taxable for non-resident. Next type of income is income from business controlled from India or profession set up in India. Profession set up in India. This is taxable for resident and ordinary resident. It is also taxable for resident but not ordinary resident. It is not taxable for non-resident. So these are the three types of income. And this is the scope of total income. Okay. Now in this question, we have to find out what is the total income if he is a resident and ordinary resident, and if he is a resident but not ordinary resident. So they have given 5 types of income. Okay. So now how we have to solve this question? You have to put serial number, particulars, next, if required, a note number, resident and ordinary resident, resident but not ordinary resident. You cannot like write R and over R but not OR in the exams. For want of time, I'm using that. You have to write it in full. So first serial number is income from house property in Sri Lanka remitted by tenant to him in India through State Bank. So this amount is not taxable. Like first, let us see if it is an income from HP in Sri Lanka. Generally, if you see, for all the persons, not only for what to say, resident, in case of resident and ordinary resident, the amount is taxable. All the income, whatever is earned across the country, across the globe, it is taxable for the residents. Because if you see, in case of residents, the scope of total income will itself specifically say, since you are a resident in India, the entire income, whatever has been received by them, is taxable in the country in which they are resident. So in this case, it is entirely taxable in the country of residence, which is India. Right? I think there is some problem with my screen. Yeah, this is the question, right? So for resident and ordinary resident, this 1 lakh of rupees is taxable. In case of resident but not ordinary resident, income which is received in India is also taxable. Hence, for him also, this 1 lakh is taxable. Second point, income from business in Singapore, controlled and managed from Singapore, and profit received rupees 5 lakhs. So this income from business in Singapore. Business in Singapore. So this is 5 lakhs. 5 lakhs is taxable for resident and ordinary resident. It is not taxable for resident but not ordinary resident. In exam, what you have to put is, you have to put note number 1, and you have to explain that this income, since he is a resident and ordinary resident, and income is not received in India, like the business is not controlled from India, the said income is not taxable in the state of India. Next is a profit from business in Sri Lanka, controlled and managed from India, but profit being received in Sri Lanka. This is taxable for both. Income from Sri Lankan business. Sri Lankan business. This is number 2. 10 lakhs. Next is number 4. Fourth point is net dividends received from Sri Lankan companies outside India. So the total income is 1,35,000 and TDS, which is deducted as 15,000. So the entire income has to be offered to tax in India for a resident and ordinary resident dividend. So this dividend, you have to tax the entire amount. So 1,35,000 plus 15,000, which is equal to 1,50,000. Here it is not taxable. Next is point number 5. Interest received on UK bonds of UK companies outside India. So this is again not taxable for resident but not ordinary. Interest on UK bond. This is note number 4. You have to say that since income is not received in India, it is not taxable for resident but not ordinary resident. So you just need to put the totals. So for resident but not ordinary resident, it is going to be 11 lakhs. For resident and ordinary resident, it is going to be 6, 16, 17 lakhs. It is going to be 17 lakhs 95,000. This is the total. Okay. For resident and ordinary resident, resident but not ordinary resident. Just to refresh the memory, there will be 3 types of residential status: resident and ordinary resident, resident but not ordinary resident, but not ordinary, OR, and NR. So income accrued deemed to be received, or I'll just put this different. I have a table here. Let me put that. Just give me a minute. Where do I have the table? Yeah, it will be somewhere here. Yeah, it is here. So this is the summary of it. Okay. So particulars: resident and ordinary resident but not ordinary resident, non-resident. If the income is received in India, it is taxable for resident and ordinary resident but not ordinary resident, and non-resident. So whatever income is received in India and accrued in India, it is taxable for all the 3 types of persons. That is resident and ordinary resident but not ordinary resident, and non-resident. If the income is received outside India, it is taxable only for resident and ordinary resident, and it is not taxable for resident but not ordinary resident, and also non-resident. Only difference between resident, in case of resident and ordinary resident, all income are taxable in India. In case of non-residents, any income other than income which is received or accrued in India is not taxable. So just in between, in the merger of these two will be resident but not ordinary resident. In case of resident but not ordinary resident, 2 incomes more than non-resident income will be taxable. First one is a business which is set up, controlled from India, and from a profession which is set up in India. Only in case of these two, in case of resident but not ordinary residents, the amounts will be taxable in the country of India. Right? Hope this makes it clear. Now let us go to the second question. Second question is going to deal with the determination of residential status. Question number 2, determination of residential status. Here we have to determine what is the residential status of each of the persons. First one, Ram, an Indian citizen employed in a foreign country, came to India on 1st of November 2024 and remained in India up to 5th March 2025. His total income is 27 lakhs for the previous year ended 31st March 2025, which included income in India for 15 lakhs 20,000. He visits India every year for a stay of 125 days. he paid income tax in respect of his foreign income in the said country. Okay. So first we have to check the condition of 6.1 and 6.6. 6.1 will say if your stay is more than 182 days, you are a resident. This condition is not satisfied in the present case. So if you see from 1st November till 5th of March 2025. So in November, he has stayed for 2024 to 25. So in November, he has stayed for 30 days. December 31 days. January 31. February 28. And March 5 days. So if we just make the total, 8 plus 2, 10, 15, then it is going to be 3, 6, 9, 11. One only. Okay. 3, 6, 9, 11, 12. 125 days. So in this case, he is not satisfying the condition of 6.1. 6.1 is not satisfied. Now we have to go to 6.2. 6.1a, next is 6.1b. 6.1a is not satisfied. Next is 6.1b. This will say 60 days or more. 60 days or more in the previous year. In previous year. 365 days or more. In preceding 4 previous years. Preceding 4 financial previous years. However, if the person is of Indian origin, if the person is of Indian origin and comes on a visit to India, this 60 has to be substituted with 182. Sorry, 120. 60 has to be substituted with 120 days. So in this case, if you see, in the previous financial year, in the financial year 24 to 25, he has been for 125 days, which is greater than 120 days. The preceding 4 financial years, preceding 4 financial years. So basically, he has always been there for 125 days per year. 125 into 4. So it is going to be 400 plus 4, 500 days. So he has been there. So he is satisfying 6.1b. 120 days or more in previous year. 365 days or more in 4 preceding financial years. Hence, he is a resident as per 6.1b. A resident as per 6.1b. So once we are sure with he is a resident, now the next point which we have to see is whether he is a resident and ordinary resident, or he is a resident but not ordinary resident. Right. So without doubts, it has been proved that he is a resident. Next point we have to see is whether he is a resident and ordinary resident, or he is a resident but not ordinary resident. To check whether he is a resident and ordinary resident or a resident but not ordinary resident, we have to go to section 6.6. So as per section 6.6, what it will say is, if his income from India is more than 15 lakhs and he has paid taxes outside India, he has to pay it as resident but not ordinary resident. So in our present case, as per 6.6c, as per 6.6c, he is a resident but not ordinary resident. Ordinary resident. This is in relation to the first part of the question. Now let us go to the second part. The question has three parts to it. The second part of the question is, Lakshman, a foreign citizen, not being a person of Indian origin, came to India for the first time on November 20th of 2024 and remained in India up to 31st of March 2025. His total income is rupees 26 lakhs for previous year ended 31st March 2025, which included income in India of 14 lakhs 50,000. So Lakshman is a foreign citizen. Is a foreign citizen. Foreign citizen. So for a foreign citizen, 6.1a will be first one, it is 182 days or more. Next is, so first let us check if this condition is satisfied. He has come to India on 20th of November and remained up to 31st of March. So in November 10 days, December 31, January 31, February 28, and March 31. So if we see his total number of stay in India, 11, then it is going to be 2, sorry, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 131 days. Okay. So he has been there in India for 131 days. So first condition is not satisfied. 6.1a not satisfied. 6.1a is not satisfied. Next is 6.1b. 6.1b condition is 60 days or more. He is not a Indian citizen. So this 120 days rule is not going to apply. 60 days or more in previous year. 365 days or more in preceding 4 financial years. Preceding 4 financial years. So if you see in this case, 60 days or more in previous financial year is satisfied, but 365 days or more in the preceding 4 financial years is not satisfied. So he is a non-resident. Non-resident. Since both 6.1 and 6.2 are not satisfied, 6.1 and 6.1a and 6.1b not satisfied. 6.1b is not satisfied. Now let us move to the third part of the question. Dr. Bharat, an Indian citizen living outside India, came to India on 5th of April 2024 and remained in India up to 10th of August 2024. During his stay in India, he has earned an income of 16 lakhs 50,000. His stay in India was 60 days in each financial year. There is no income tax in the country in which he is a resident. This is an important question. Point number 3. Person Bharat is a person of Indian origin. Person of Indian origin. So we have to check first 6.1 if he is satisfying. So let us check that. So came to India on 5th of April and remained in India up to 10th of August 2024. So number of days in previous year. So from 5th of April till 30th of April. So April, we have only 30 days, right? So we have 25 days in April, May 31, June 30, July 31, August, he was here till 10. So August 10. So his total stay in India is going to be 7, 3 plus 3, 6, 9, 10, 12. 127 days. So first, 6-1 is not satisfied. 6-1A. 6-1A not satisfied. Since number of stay is less than 182 days. Next is 6-1B. 60 days or he is a person of Indian origin. So 120 days or more. 120 days or more. This is satisfied. 365 days or more. Days or more. This is not satisfied. So it's not going to be a resident under 6-1. Now we have to look at 6-1A. As per 6-1A, if he is a person of Indian origin, or citizen, he earns more than 15 lakhs in India, 15 lakhs in India, and he doesn't pay tax on his income in the country of his residence. Does not pay tax in the country of residence. If his income is more than 15 lakhs in India, and if he's not going to pay country of residence, he is to be deemed to be a resident. Deemed to be a resident. In the present case, his income is more than 15 lakhs in India. Income in India is greater than 15 lakhs. Hence, he is a resident as per 6-1A. However, if a person is deemed to be a resident under section 6-1A, he is always deemed to be a resident but not ordinary resident. Always resident but not ordinary resident. Hence, in the present case, Mr. Bharat Bharat is a resident but not ordinary resident. Hope we are clear with this. Okay. With this, question number 2 comes to an end. Third question is in relation to agricultural income. Question number 3, agricultural income. In agricultural income also, totally there are 2 types of questions which is generally being tested. First one is What is the agricultural income? What amount is exempt? What is agri income? Next one is the partial integration method. Partial integration method. First, let us understand what is an agricultural income and what quantum of it is being taxable or not. See, if you just recall, agricultural income is not taxable in the country of India, right? But however, certain portions of it, if a person is going to be in the process of tea, manufacturing of tea or manufacturing of coffee, in such cases, the entire income does not pertain only to the agricultural income, and it has to be split properly between what is an agricultural income and what is not a agricultural income. So this proportion, which is based on rule 8, rule 7a, rule 7b, plays an important role, right? Just a minute, I'm opening that screen, just give me a minute. Yeah. So if you see, this is the table which we use to determine whether an income and what portion of an income, if a person is engaged in growing and manufacturing of tea, pertains to agricultural income, and what portion pertains to non-agricultural income. Okay. So if a person is engaged in the growing and manufacturing of tea, for 60% of his income is deemed to be agricultural income, and 40% of income is deemed to be non-agricultural income. If a person is engaged in growing and manufacturing of rubber, 65% of his income is deemed to be agricultural income, and 35% of his income is deemed to be non-agricultural income. And if the assessee is engaged in the business of growing and manufacturing coffee, and if the coffee is grown uncured by the seller in India, then 75% is agri income and 25% is non-agri income. If the coffee is grown, cured, roasted and grounded by the seller in India, with or without mixing chakri or other flavoring ingredients, in such case, 60% of the income is deemed to be agricultural income, and 40% of the income is deemed to be non-agricultural income, right? So our first question is going to revolve around what is an agricultural income, what portion is an agricultural income, and what portion is not an agricultural income. Okay. Now let us check that. But this question, what we are solving now, has both the components. It first deals with what amount pertains to agri and what amount pertains to non-agri. And this also deals with the partial integration method. Okay. Brij Mohan, 62 years old, owns a tea estate in Assam. He owns a nursery wherein he grows plants and sells them. He furnishes the following particulars. Profit from sale of green tea leaves is 1,75,000. Profit from manufacturing of tea grown in the garden owned by him 7 lakhs. Profit from sale of plants from nursery is 1 lakh. Okay. So let us go to question number 3. Question number 3. So first we have to determine what is agri income. Determination of agricultural income. Particulars. Agri income and non-agri income. So first one is sale of green tea leaves. Sale of green tea leaves, if you see, there is no much processing which is being done to it, and the tea, which is the direct produce, is sold as such. And there is no processing which is being done to green tea. But if you see in case of other tea, which is being manufactured, in that case, what will happen is they will not only what pluck the tea leaves, but they will also be involved in the process of curing and what they'll roast, they'll powder it and then sell it. So that part is going to be there. Now, in case of sale of green tea leaves, sale of green tea leaves, fully it pertains only to agricultural income, 1,75,000. Next is profit from manufacturing of tea grown in the garden owned by him is rupees 7 lakhs. Profit from sale of tea business. It is 7 lakhs. So if you see here, if a person is engaged in growing and manufacturing of tea in India, 60% of the income is agri income, 40% is non-agri income. So what will happen is 7 lakhs into 60% is agricultural income. So 42, 4 lakhs 20,000. And non-agri income is 40%. 7 lakhs into 40%. 2 lakhs 80,000 is non-agricultural income. Third point is profit from sale of plants in nursery, plant sale. This is fully agricultural income. There is no non-agri portion which is involved in it. So this is 1 lakh. So if you see the total, it is 5 lakhs 20,000 and 2 lakhs 80,000. The question is silent on the scheme of taxation. Silent on scheme of taxation. If the question is silent on scheme of taxation, you can always in the for assessment year 25-26 assume that the person has opted for the default tax regime or the so-called new tax regime in section 115 BAC. He has opted for 115 BAC. He is in the new tax regime and he is not in the old tax regime. This you can, for all the questions you can apply. If there is nothing mentioned about the old tax regime, you can always presume and make an assumption that he is in the default tax regime or the new tax regime. But while writing in the exam, just give a note which will specifically state that in the absence of information as to whether old tax regime has been adopted, old tax regime has been adopted. If as to whether old tax regime has been adopted, it is assumed that the person, that the assessee is paying tax under the new tax regime, is paying tax under default tax regime, default tax regime in 115 BAC. You can use the exact sentence in the examination whenever there is a rate involved. If they ask you to find the tax liability, and if there is no information which is provided, or this information is required for you to compute the income, whether you if there's certain deductions are availed or not, in all such cases, if there is a question, just ensure this note forms part of your answer. This will make a very big difference because this will show how much clarity you have in the subject. Right? So coming back to our question, so now we have to check what is going to be the tax liability in the first case. So here if you see non-agri income is 2,80,000. Non-agri income is 2,80,000. 2,80,000. and this is lower than the basic exemption limit of 3 lakhs in the default tax regime. Default tax regime. So if you want to know about the tax rates and its discussion, we have already discussed that in the amendments video. You can check that. The default tax regime. Okay. Since the person has opted for default tax regime and his income is and non-agree income is less than basic exemption limit, partial integration method, partial integration not applicable. Not applicable. ABL. Now let us understand what do you mean by the partial integration method. Agricultural income. This is the partial integration method. Just copy paste this. This is the partial integration method. So what we have to do is first we have to compute the total income, and compute the income tax on total income without including agricultural income. What is going to be the total tax liability? And the second point, what we have to do is we have to compute the income tax on agri income and maximum basic exemption limit. And first step and the second step is going to do the will let you know what is your tax liability. However, two conditions are to be satisfied to apply the partial integration method. The first one is your agricultural income should be more than 5,000, and the second point is that non-agricultural income should be more than the basic exemption limit. Right. So since in the present case, what we have, since the income is not more than the basic exemption limit, such the partial integration method is not applicable and no tax is payable. Tax liability is nil in the first case. In the first case. Now let us go to the second case. In the aforesaid illustration, if the profit from manufacturing of tea grown in the garden owned by him is rupees 10 lakhs instead of 7 lakhs, then what would be his tax liability? This is part 2. Now we have to find the revised total income. So profit again we have to go for agri and non-agri. Agri income, non-agri income. In agri income, first one is sale of green tea leaves. Green tea leaves. In the sale of green tea leaves, it is totally agricultural income. There is no change in that. It is 1,75,000. Non-agri income is null. Then tea business. Agri, non-agri. Then next one is tea business. Tea business, now the total is 10 lakhs. Into 60% is agricultural income, 6 lakhs. Next here it is 4 lakhs. 40% of 10 lakhs. Okay. Next point is nursery plant. Nursery plant. The income from nursery plant is fully agricultural income. It is 1 lakh. So now the total income is going for agricultural income is going to be 8 lakhs 75,000. 8 lakhs 75,000, and here it is going to be 4 lakhs. Okay. Now next step, what we have to do is we have to find the tax liability as per partial integration method. Partial integration method. Let us go stepwise. Step 1, tax liability including agri income. So what is my total income now for this step? For this step, my total income is going to be 8,75,000 plus 4 lakhs. Okay, so it is going to be 12 lakhs 75,000. For this 12 lakh 75,000, we have to find out what is going to be the tax liability. So as you all know, 0 to 3 lakhs tax is nil. Okay, 3 lakhs to 7 lakhs rate is 5%. It is going to be 20,000. Next, 7 lakhs to 10 lakhs, the rate is 10%. And for 3 lakhs, it is going to be 30,000. Next, it is going to be 10 to 12 lakhs. 10 to 12 lakhs, it is at 15%. So for this 2 lakhs, we have to compute it at 15%. So it is going to be 2 lakhs 20 plus 10, 30,000. So 12 to 12.75. So for this alone, it is going to be at 20%. So for 75,000, we have to compute 20%. Oh, sorry. We have to compute 20%. So it is going to be somewhere around 1.5, 15,000, I guess. So 10% is 7,500. Yeah, 15,000. Is it 15,000 or 1,500? Whether if it is 10%, 7,500, 15,000. Hope my computation is right. Let me just check my computation alone. Just give me a minute. Let me put it in calculator. It should come to 95, 60, 30, 70, 80, 85. Rate of tax. Just give me a minute. I'm just computing the tax liability. Yeah, it is correct only. Okay. It's so this amount is correct only. There is no change. So the total is going to be 30 plus 30, 60, 60 plus 20, 80, 95,000. So as per step 1, tax liability is 95,000. Okay. Now we have to go to step 2. Step 2 is we have to find the tax liability on agri income plus basic exemption limit. Basic exemption limit. In this case, what will happen is, so my agricultural income in the present case is 8,75,000. Is 8,75,000 plus my basic exemption limit is 3 lakhs. So for 11,75,000, I have to find out my tax liability. Again, 0 to 3 lakhs, nil. 3 to 7 lakhs, 20,000. 7 to 10 lakhs, it is 30,000. Sorry, yeah, 30,000. 10 to 11.75. 11.75 at the rate of, so this will be 5, this will be 10%, this is going to be 15%. So for this 1,75,000, I have to find it at 15%. Let me just put that 75,000 into 0.15 equal to 26,250. Okay, so 0, 5, 2, 6, 66,250. Now we have to find out step 3 is S1 minus S2. So what is my S1 here? S1 here is 95,000 minus 66,250. So my total is going to be 247, 10, 1. It is going to be 7, 7 plus 28,750. Okay, this is going to be my difference. But I think there is some problem with this. Wait, my computation is wrong somewhere. 76,250. Okay, I think my total is different. 2, 3, 4. Okay, it is 76,250. Sorry. This one is not 66, just a computation error. This is 76. 76,250. So it will be 18,750. Okay. Now comes the very, very interesting part. Tax liability is 18,750. So what is my total income here? My total income in the present case, agri income is exempted, even though we are including it for partial exemption method. My total income here is just 4 lakhs, correct? So since my income is less than 7 lakhs, I am eligible for 87A rebate. This is the twist turning point. After finding all these, I am now eligible for 87A rebate since my income is less than 7 lakhs. So what is going to be the rebate under 87A? Total tax liability or 25,000. Total tax liability or 25,000. 25K, whichever is higher. Correct? In the present case, what is high? Sorry, whichever is lower. So in the present case, what is lower? Tax liability is lower. So total tax liability is 18,750 minus a rebate, which is again going to be 18,750. So now my total is null. So after all these computations, the tax liability in the present case is null. Hope everybody understood this. Very good and very interesting question, right? Let us just take a very small break. We'll just connect immediately. Pause. Pause. So we were dealing with question number T3 till now. So we have completed 2 chapters questions. One is residential status and the other one is the agricultural income. Now let us go to question number 4, which is salaries. We'll deal with salaries question now. Question number 4. Number 4, salary. As far as salary chapter is concerned, it will be more or less similar to a total income question, but this will not have deductions and it will mainly deal with all the other allowances and deductions. So whenever you're starting a question, not only for the chapter of salary, for all the chapters, first understand what is the requirement of the question. Does it ask you to compute the income alone, or is it asking you to compute the tax liability? First check that and then venture into the question as to what is the requirement, and then solve the problem rather than like you making an assumption and solving the problem. And what I would always suggest is, see, if you have a question like this, a big question, first go and see what the requirement is. What are they asking me? They are asking me to compute the income from salary. Okay. So if in this backdrop you are going to read the question, it will give you much more clarity than if you are just going to go from top to bottom. Just do the reverse. First, read the first 1 or 2 lines, then come to last, find what is the requirement, and then again go and read the full question. That's the best way to solve any problem in examinations, right? So now let us start working on the question. So we have to find the total income, computation of income from salary. Computation of income from salary. Income from salary. So as always, it is going to be serial number, particulars, note number, amount in rupees, next again amount in rupees. Okay. So the first component is going to be basic pay as on 1/4/2024 is 24,000. Increment of rupees 1,000 per month falls due on 1st of July every year. So it is going to be number 1, basic salary. Basic salary. So it is going to be like 24,000 into 12. You can do it anyway. I do it this way. Then 1st of July each year. So July, August, September, October, November, December, Jan, Feb, March, 9 months. So for 9 months, there is going to be an extra 1,000. So it is going to be 24,000 into 12. It is going to be 12 to 24, 2,40,000. Then this is going to be 48,000. Let me just put it here. Plus 9,000 equals. So the total amount is going to be 2,97,000 is going to be the basic pay. Okay. Next point, what we are going to see is point number 2. It is dearness allowance, forming part of salary, 100% of basic pay. So what is my basic pay? Same amount is going to come here. Dearness allowance, DA. Again, whatever we have put above, it is going to come here. 2,97,000. Next, third point. Children's education allowance, rupees 600 per month. So if you see here, again in this question, they have not said whether he is opting for new old regime or not. So we are making an assumption that he is opting for the new regime. Okay. So children's education allowance, children education allowance. So it is 600 per month for 12 months. 60, 72, 7,200. Next is point number 4. So I think there will be some pen or something like that. I choose it. Next is point number 4. Point number 4 is remuneration from Banwaripur University as examiner. So this amount, it is not taxable under the head income from salary. Since it is for examiner, there is no employer-employee relationship. Hence, this will be in taxable under the income from other sources. So this is not going to come under income from salary. Their question is only income from salary. So this can be omitted for. But you have to write the reasoning alone. You have to say remuneration for examiner, note number 1. In the note number 1, you have to say that this amount is not taxable. That is very, very important. Okay. Next is medical allowance of 1,000 per month and for a bonus of 15,000 per annum. So medical allowance. Medical allowance of 1,000 per month is going to be 12,000. Then bonus of 15,000 per annum. Okay. Bonus of 15,000 per annum. That is also full. Next, the employer provided a furnished free accommodation in Kolkata. Fair rental value of the house was 14,500 and furnished with furniture costing rupees 50,000. So if you see in this case, what will happen is, if the chauffeur has been provided for, in that case, sorry, not chauffeur, if the rent-free accommodation has been provided for, in that case, what will happen is, hope my screen is visible on the PPT. Value of free rental accommodation, motor vehicle, interest free loan, gift voucher, club voucher, transport, mobile asset, value of perquisite, it is here, accommodation by the employer. If you see here, if it is a furnished accommodation, it is given in point number 3. Okay, it is given in point number 3. It is here. If the furniture is owned by the employer, value as per 2 plus 10% of cost of furniture per annum. So here if you see 15% of salary in cities having population more than 25 lakhs as per 2001 census minus rent required. 10% of salary in cities having population more than 10 lakhs but less than or equal to 25 lakhs minus rent required. 7.5% of salary in other areas minus rent required. So for this purpose, the salary includes pay, allowances to the extent bonus or commission or any monetary value. It does not include the DA if it is not going to form part of salary. Then employer's contribution to PF and interest thereon. It also does not include the value of perquisites. So salary for this period should be reckoned only for the purpose, only for the period for which the employee occupies the accommodation during the year. So now let us find out what is the salary first to find out the value of perquisite. Okay. So in the present case, what is happening is, the person is using the accommodation which is provided by the employer himself. Okay. Since he is using the accommodation which is provided by the employer, he has to pay tax on this perquisite. And there is no rent which is being recovered from him for this point. Okay. So we have to find out what is the purpose of salary. For this purpose, we have to include basic, bonus, DA, medical allowance, and children's education allowance. So let us just make that total now. My screen is not visible. It is now visible. Medical allowance and bonus. So basically, we have to make the total till here. This is going to be the salary portion. So it is 2,97,000 plus 2,97,000, somewhere around 6 lakhs minus 6,000, 5,54,000. 5,54,000 till here. 5,54,000. Then we have to make the total 0, 0, 2, 5 plus 2, 7, 7 plus 7, 14, 18, 8, 9, 1. 5 plus 1 5,82,800. Wait, let me just check. Just. 5,82,800. Oh, my computation is wrong. Sorry, 628,200. 628,200. My amount total is wrong. Just a minute. I'm just changing the total alone. Total is wrong. Where is the eraser? Eraser. The amount is 628,200. 628,200. Hope this amount is right. This is the total. Yeah, 628,200. Okay. So till this is the value we have to consider. So now value of rent-free accommodation. Value of rent-free accommodation. It is going to be 10% of 628,200 plus 10% of 50,000. So this 10% of 628,200 comes from the point that they haven't, it is in Kolkata. Okay, but we are making an assumption, and that is the assumption which we are carrying out. So this 10% plus 10% of 50,000. So it is going to be 62820 plus 5,000. There is no rent which is recovered from the employee, so it is not a problem. So 02876. This is the value of rent-free accommodation. Next is point number 8. Point number 8 is going to be, she was provided with a sweeper and a watchman whose monthly salaries were 3,000 and 4,500 respectively. So this amount salary, this is fully taxable again. So it is 3,000 plus 4,500. So 3 plus 4, 7, 7,500 into 12. So it is going to be 60, 72, 84. 84,000 plus 600. It is 90,000, I guess. Hope my answer is right. Wait, let me check. 75,000, 7,500 into 12. 90,000. Next is point number 9. Point number 9 is, she is a member of a RPF and contributed 14% of her salary. Her employer also contributed 14% of salary to the Provident Fund. In case of Provident Fund, what will happen is, if it is a recognized Provident Fund, any amount, so the second portion deals with the recognized Provident. You see here, this portion deals with the recognized Provident Fund. Okay. So as far as recognized Provident Fund is concerned, so any amount which is in excess of 12% of salary is taxable, or any amount in excess of 7.5%, 7.5 lakhs is taxable. And interest on employer contribution in excess of 9.5% is taxable. And interest on contribution made by the employer in excess of 7.5 lakhs is taxable. Employee's contribution is eligible for ATC, but in case of default tax regime, ATC is itself not applicable. And interest on employees' contribution is such that in excess of 9.5% it is taxable, and contribution in excess of 2.5 lakhs or 5 lakhs is taxable. On retirement, it is exempt on satisfaction of conditions. So coming back to our present question, so she is a member of recognized PF and contributed 14% of her salary. Employer also contributed 14% of salary. So here what will happen is, till 12% it is exempt, and remaining 2% it is taxable. Now we have to find out what is the salary for the purpose of employment. So for the purpose of recognized Provident Fund. For the purpose of recognized provident fund, only basic plus DA is to be considered as salary. For the purpose of recognized provident fund, RPF, so only basic plus DA, which is going to come to around 5 lakhs 50 4,000. 7 plus 7 14, 9 plus 9 18. Sorry, this is 7 plus 7 14, 9 plus 9 18, 18 plus 19 594. So 5 lakhs 94,000 into 2%. This is taxable now. So 1% it is going to be 5940 plus 5940. So it is going to be 0 8, then 9 plus 9 18 plus 10 11,880. Hope my computation is right. 11,880. So the next point is interest on, this is contribution, employer contribution, employer contribution, employer contribution. Next is employees contribution. Sorry, interest on employer contribution. Interest on employer contribution. As far as interest on employer contribution is concerned, any amount in excess of 9.5% is taxable. And in this case, interest is credited at 13% per annum. Okay. So credit balance of 13% per annum, credit balance of provident fund rupees 6,500. So this excess of 9.5% we have to tax it now. So if this is 13%, we have to find out what is 4.5%. So the entire credit which has come in the present case is somewhere around 6,500. Okay. Since the amount which has come now is just 6,500 and that is for 13%, we have to find out what is for 6,500 is for 13%. We have to find out what is the amount for, what is 13.5 or 13. So 9.5, 10.5, 11.5, 12.5, 13. Okay. 0.035. We have to do this computation. Wait, let me put this equal to 6,500 by 13. Into 3.5. 3.5, which is equal to it is 1,750. So this amount is taxable now. 1,750 is taxable as salary. So this is point number 10. Okay. Next, we'll go to point number 11. Point number 11 is she has taken a policy of rupees 5 lakhs on her own life, for which she has paid a premium of 15,000 during the previous year. This is not, we are not concerned with this because ATC, ATD, nothing is applicable since she has opted for the new tax regime. Next is employer paid her professional tax of rupees 1,000. So since he has paid, that is also taxable. Employer professional tax. Professional tax 1,000 is taxable. This is not eligible for exemption because under new tax regime only rupees 75,000 under 16(1) alone is eligible as deduction. All the other sums are not eligible as deduction. So that is also not there. Next is point number 12. She is provided with a 14 HP car owned by the employer and has been used both for purpose of employment and personal use. Entire expenses are borne by the employer. Now let us check what is the value of perquisite in this respect. So we have put a very detailed video on salaries in the YouTube. If you have any doubts, you can refer that. That the salaries as a chapter has not gone into major changes. So the old video can be used, should not be a problem. Okay. So now our case is falling under the first point. Motor car is owned or hired by the employer. Nature of use is it is wholly and exclusively for the purpose of its official duties. Then there is no thing which is required. However, if it is used exclusively for the personal purpose and running and maintenance expenses are met by the employer, depreciation on original cost at 10% plus running and maintenance expenses met by the employer, minus amount recovered from the employee. Okay. Now let us check what is the amount that is not available. So in this case, it is partly for personal purposes and partly for employment purposes. So it is not under fully for personal purpose. So it is going to come under this. Now, if you see partly for performance of duties and partly for private purpose, expenses are met by the employer, and CC capacity does not exceed 1.6 means 18,800 per month plus 900 if chaffer is provided. If it does not exceed 1.6 liters now, it is going to be 2,400 per month. It is going to be 2,400 per month plus 9,000 plus chaffer. If it is owned or hired by the employer and expenses are met by the employee, then in such case also what will happen is it is 600 plus 900. However, in this case, part of the expenses will be met by the employee. Okay. So now let us check what is the capacity which is given here for the purpose of computing the the value of perquisite here. So it is 14 HP car. So it is going to fall under this category. Where is my PPT screen? It is here. So it is going to fall under the first category. They haven't provided if the chauffeur has been provided or not. So we are making an assumption that chauffeur is not provided. So motor car, value of perquisite motor car. It is going to be 1,800 per month into 12 months. So it is going to be 12,000 plus 60, 70, 84, 96, 9600. So it is going to be 21,600. Hope my amount is right. Please check this along. Now let us do the total. So we have already computed till here it is 62, 82, 000. And now after that it is going to be, we have to add all these amounts. So let us do it here. Let me do it here. 62, 82, 00 plus 67, 820 plus 90,000 plus 11880 plus 1750 plus 1,000 plus 21,600 equal to 8 lakhs 22250. This is the total. Let me just bring it here. It is going to be 8 lakhs 22250. This is the total taxable income. Hope we are clear on this point. Now what we have to do is, there is only one more point which is remaining in this. We have to reduce the standard deduction. Standard deduction under section 16(1). If I'm opting for default tax regime, my deduction is 75,000. 75,000. Okay. This comma is wrong. It lakhs 22250. 75,000. 052 in 5 plus 10 is equal to 12 plus 188 plus 4 is 12. 1 plus 7,47,250. 7,47,250 is the total taxable value. Super. This is the answer. This is income from salary. Okay. So this is the total amount. Shall we go to the next problem? What is the time now? Sorry. So what we'll do is we'll pause here for the day. We'll just take up the next question in the next session. Okay. So we have completed, we are going to solve one more problem in salary. And after that, we'll proceed, and mostly by tomorrow, we'll complete all the questions. And maybe you can expect somewhere around 2 to 3 more videos max. That's it. So with that, the entire syllabus and solving of super 30 questions for the income tax will be done. After that, we'll take up GST. Okay. Hope we all have a good understanding. If you have any doubts, you just feel free to put up in comments. We'll just resolve all those comments as and when there is a requirement. And we have also uploaded the amendments video that could be used. And if you want this PDF, you can just text to this number, which is given here, and you can get the copy of this PDF from there. Okay. Thank you. Have a great day.